Hey everybody, back in my living room for the second video. I promise we'll go back to the office. It's fun. But anyways, Tesla just reported Q1 earnings, and as expected, the results weren't that great. Earnings per share came in at 27 cents. This is compared to the analyst expectations of 39 cents. That's quite a bit of difference. And it was also a revenue miss, coming in at 19.34 billion versus a consensus estimate that it would come in a slightly over 21 billion. Now, this was just reported today, so we will see how the stock will react tomorrow. When it comes to Tesla stock can be extremely volatile. And in reality, the earnings reports seem to have no bearing as to how the stock will perform the following day. So it might be up, it might be down. Elon Musk did announce that he is going to limit his time at Doge in the near future. And of course, I'm sure he did that because the earnings report wasn't that great. So this might actually boost the stock tomorrow. We'll have to see. But what I want to do today is more so paint a pros versus cons picture for Tesla stock after the most recent earnings report. Now, just for full disclosure, I personally believe Tesla is extremely overvalued. This comes from someone who was invested in Tesla. I caught Tesla very early on in my eye before it was even public. I was very young at the time. I couldn't invest, but I liked Tesla then. I still like the concept now. I think EVs are going to slowly take over the car market, whether that's forced or because we should. I don't know. But the point is, Tesla in its current form has grown far beyond what I think probably even Elon Musk thought it would grow at the very beginning. And in its current stage, I do think that it is overvalued. But I'm going to try to give the most unbiased picture as possible. And I'm just basically going to give you a list of pros and cons for Tesla. So let's do just that. As always, my name is Derek. I got my degree in finance, so you don't have to. Let's dive right in. So since the earnings report was pretty bad today, let's instead start with the pros for Tesla, and then we'll do the cons. So I think the first major pro for Tesla is its cash position. It has over $37 billion of cash on hand. This is extremely strong by any account, and it gives it plenty of wiggle room to kind of withstand a storm. Right now, Tesla is facing a sales decline storm, but this cash on hand makes it at least pretty well insulated for the short to midterm. As long as this sales decline isn't permanent, talking 2, 3, 5 years out, then it should be pretty good simply because of its very strong cash on hand. The next pro for Tesla is actually its positive free cash flow at $664 million. And I believe this was actually an improvement this quarter, even though it was a down quarter. Now, this kind of has to do with a few different things. One is Tesla kind of pulling back its investment to match the current market environment. But positive free cash flow is always a good sign, and in the case of Tesla, it's positive even though the quarter is negative. The next pro for Tesla would be the businesses that it operates that are outside of solely automobiles. We're talking full self-driving, we're talking energy like solar and batteries, and there is strong growth here. For example, solar and batteries have grown 67% year over year. That's a positive sign, and it's now generating well over $2.5 billion per quarter. This is still not remotely close to its vehicle sales, but it is a positive area in the overall Tesla business. And on the same note, the next pro for Tesla is its full self-driving, with one major caveat: if it can actually implement it at scale, and if it decides to continue on with licensing that to other companies. Tesla has promised full self-driving for many, many years, and it is constantly being delayed. I know this is supposed to be the pros section, not the cons. The point is, if it actually does come to fruition, along with its robo-taxi, which it will rely heavily upon its FSD, then this could be a major cash cow for the company. Again, remember, I think the company, in my opinion, is overvalued. I'm trying to be as unbiased as possible and give both sides to the coin. So while there are some doubts about its robo-taxi, as well as if this is even going to be profitable in the first place, as well as that some of its competition like Waymo are already well ahead of them when it comes to actually implementing it, Tesla believes that it will have a robo-taxi beta program in Austin, Texas mid this year. But for example, Waymo has been operating in cities for many years at this point, but we'll have to wait and see for middle of the year. Now, the next thing that I want to talk about is supercharging. So Tesla has decided to open its supercharging network to other EVs. Now, this was a controversial decision because it's basically taking Tesla from something like Apple, which has a walled-off infrastructure, a walled-off garden per se, basically like iMessage. You can only use iMessage if you have an iPhone. Well, Tesla used to be like that. The supercharging network was one of the main benefits to buying a Tesla. But now, if it does continue to roll out, which it already is, its implementation to other electric vehicle manufacturers, well, then one of the main benefits to buying a Tesla actually is basically diminished because any other EV also gets access to this network. On the flip side, though, Tesla can charge fees for using this network of chargers. Now, this network is far across the United States, and it is well ahead of everybody else, like Electrify America, which doesn't even come close. So this could also be an area where Tesla starts to generate potentially billions of dollars in revenue by offering charging to other electric vehicles. If we're ever going to implement electric vehicles across the board, they have to be good at road trips. Right now, they are not. One of the main reasons is because the charging infrastructure just is not there. So Tesla is a leader here. And if it can charge basically 40 to 50 cents per kilowatt to a ton, millions potentially, of other electric vehicles, it could become a source of strong revenue. Another area not as exciting is CapEx, capital expenditures, is down 46% year over year. This has to do with cost cutting when it comes to Tesla. So that, of course, is a benefit, especially if revenue is also taking a hit. You basically have to find margin somewhere else. And the final pro for Tesla, without diving too deep into the financials, is simply its brand power and brand presence. Now, Musk, there is some data and evidence that Musk aligning himself with Trump has damaged some of that brand power because, look, whether you like it or not, right now, a majority or a large portion of EV buyers lean left. So this has kind of alienated some of his base. With that said, Tesla still has a massively strong brand image. And as we progress down the line into full EV implementation on a global scale, Tesla still leads in brand recognition and brand power. This is one of the strongest reasons or strongest cases for Tesla, as long as it can deliver on its promises, like full self-driving, like the Optimus robot, and like Robotaxi, which obviously are yet to be seen. And personally, I don't know if they ever will come into fruition. But the point is, Tesla is a known brand, and that will give it a benefit if it is able to compete when it comes to products. Okay, now the cons for Tesla. And as Tesla matures as a company, the cons are only becoming more and more evident. One of the major cons to Tesla is competition. I mean, at the end of the day, the more that EVs are bought and the more that EVs are pushed, the more that competition is going to create good quality competitors to Tesla. Right now, you have Hyundai Kia leading the way. They're making fantastic electric vehicles. You have every major luxury brand, so the three big Germans, that's Mercedes, Audi, BMW, they are all putting electric vehicles at the forefront of their lineup. And as the years progress, the products are only getting better. And then, of course, there's the major one. That is BYD. BYD right now is absolutely just running circles around Tesla, especially in the Asian markets, especially in China. But BYD is also sold in the European Union and those countries. Now, BYD is yet to be sold in America. That's mostly because there is a 100% tariff on Chinese-made electric vehicles to protect the domestic market. Not to go off on a tangent, but at least I can see when it comes to tariffs, this is a good implementation of a scalpel-like tariff to protect a growing domestic industry. On the flip side, though, even tariffs that could be seen as good have a negative, and that is that us, the U.S. consumer, don't get access to some of the cutting-edge products coming from overseas, particularly in this case, China. But BYD is a major threat for Tesla. And as we look 5 or 10 years down the line, it will remain probably the major number one threat to Tesla's global dominance, because right now BYD is producing equally or maybe just slightly below when it comes to quality, and that's across the board. That means full self-driving quality, that means interior quality, that means performance, that means efficiency. I mean, they're right there with Tesla, but they're doing it for a significantly lower cost. And of course, you can see this competition show itself in margin compression. Margins for Tesla have fallen 12% this quarter when it comes to Tesla's auto sector gross margin. Now, the reason for this is because of more competition. Tesla has had to offer lower priced vehicles. It does this through incentives. It does this through constantly changing the prices of all its vehicles, the Model Y, Model 3, Model X, and Model S, and sometimes the Cybertruck as well. But it's basically having to lower its prices to be able to compete more and more. Before, it could charge whatever it wanted because it was the only option around. But even in the United States, there are other good quality options now. So you see this as margin compression. This is dangerous for Tesla because one of the reasons why Tesla is valued so far and above other auto manufacturers is because its margin on its vehicles has been fantastic. It's been like many times above other manufacturers. But as you get that margin compression, that edge starts to basically dwindle. The next major con is falling growth trajectory. Now, Tesla has offered a justification for this. It is rolling out refreshes for its model lineup, and as such, it's had to basically lower production and thus deliveries so it can retool its facilities for refresh production. Now, this might be the case, but this also leads us to another con, and that is how dated the lineup in general for Tesla is. Tesla doesn't really seem to refresh models much. Now, there is visible change. The Model 3 just got a refresh. The Model Y also just got a refresh. But when you look at the Model S, the first one, and then you look at the current one being sold, same with the Model X, and same with the Model Y, and same with the Model 3, they all share extreme similarities, even though at this point, other manufacturers are probably 2 or 3 generations in to those vehicles. Now, Tesla has recognized this, and it might start to refresh the lineup, but what I've seen from Tesla is it doesn't really refresh lineups, it just adds new vehicles, which so far has worked out well, but we're getting to the point where we're 10, 12 years when it comes to these very similar shapes, and it just... The lineup needs a refresh. Now, another area that's a con in my opinion is that Q1 deliveries fell, even though there have been aggressive price cuts as well as aggressive incentives. That means that Tesla's aggressive incentives still have not been enough to keep up with falling demand because, again, most things come down to supply and demand. And if your demand is dwindling, how do you increase demand? Well, you lower the price until you find the new equilibrium. Tesla is basically trying to play catch up with this, and you see that in Q1 of this year delivery numbers. And the final con that I want to list in this video is that Tesla is still lacking a seriously affordable vehicle. Yes, the Model 3 is affordable, but Tesla had at one point promised a sub $30,000 Tesla. If you want mass adoption of electric vehicles, you need lower priced vehicles, and other manufacturers are seemingly starting to produce those. So if Tesla wants to compete with these much lower priced vehicles, I mean, the Chevy Bolt is an excellent example of this, and the Chevy Bolt is getting a refreshed model. I shouldn't even say refreshed, a completely brand new model, I believe, next year. It's going to be difficult for Tesla to compete against that without offering a true sub $30,000. I think at one point Elon Musk even said that it would be around $25,000. So there's a lot more to cover, and we could do a deep dive into its actual financial statements. We could look at its balance sheet, we could look at its income statement, we could look at its cash flows, but to keep this beginner friendly as well as a casual conversation, I think I'm going to end the video here. Tesla right now is facing a turning point in its growth. It is becoming a mature company, and other competitors are starting to eat away at its lead. And we will have to see over the next year if Tesla innovates enough, if it innovates enough to remain the global dominant electric vehicle producer, or if other legacy manufacturers like Ford, like Hyundai, Kia, like Toyota and Honda, which haven't even gotten into the game yet, so it's going to be interesting when those two get in the game, as well as the major threat, BYD. We're going to have to see if Tesla remains the dominant EV player, or if one of these, likely BYD, starts to just absolutely dominate and push prices down. Because you have to remember, if BYD is able to produce electric vehicles here and Tesla is selling them up here, even if BYD is not a global player because of tariffs, it's not allowed in the United States, the fact that it is innovating down here is going to cause other competitors, Toyota, Honda, when they get in the game, Hyundai, Kia, Ford, even the luxury ones, it's going to cause them to innovate to bring their prices down to compete in the markets where they compete against BYD. And of course, those innovations might make their way into the US market, which would only put pressure, not directly, but indirectly from BYD in Tesla's largest market, which is the United States. If you found this video informative, please consider subscribing. It helps the channel tremendously. I promise I do film most of my videos in my office, but yesterday and today, these major events were released, and I just wanted to get a video out as quickly as I can. And it's also fun just to have a casual conversation with you guys. So again, if you like personal finance, world economics, and investing broken down simply, you're on the right place. I hope you stick around for the next video. And until then, I hope you have a fantastic rest of your day, and I will see you in the next one. Take care.